Hey everyone, welcome back to your weekly market outlook. This is for the 8th of December 2025. So yeah, let's take a look at last week. I don't think we have a lot of news coming out from last week, and obviously because of that NFE numbers being pushed back and whatnot. And this is actually very, very interesting because if we take a look at the calendar for this week, we are actually going to be getting the FOMC statement before the NFP numbers itself. So very interesting in terms of how this rate decision is going to be, how is actually going to be made without that information. But obviously, market is currently pricing in for that 25 basis points cut. But if we take a look at the technicals later on, it does point to a very different story here. But yeah, next week, a lot of interest rate decisions there. We've got the RBA as well. In terms of the RBA, that's going to be on Tuesday for you guys in Australia. Not expecting any changes there. And then we've got the Bank of Canada. That's also not expected to change or anything like that, as the FOMC interest rate decision itself is actually very important. But I think what we should be looking at here is the economic projections, as well as the statement that they're actually going to be releasing for the month of December. And again, this is going to be their forward guidance, and I think this is probably why, if we take a look at the movement on the US dollar, despite the potential rate cut happening this week from the FOMC, the US dollar is actually gaining strength here. There might be that hawkish cut talk again from the Fed. And obviously, with the lack of information there in terms of the labor numbers, it's actually going to be really hard for the FOMC to kind of figure out what's actually happening. So they might do that cut just to be more of a preemptive thing rather than anything else. And if we do have that unemployment rate actually dropping down, that would actually send the dollar strengthening for the rest of December, right? And also on the same day, basically on Thursday, we're also going to be looking at the interest rate decision from the Swiss National Bank. But again, this is not very important at all because they're already at zero at this point in time. So there's no talk going into negative or anything like that. So I think it's actually going to be not that relevant. All right. Let's take a look at the technical scale. Very, very important here. And if we take a look at the Aussie USD, and this is actually a pattern that's actually, if we go by correlations in the market here, all the major currencies are actually exhibiting the same thing here, that there might actually be a potential turnaround. There's actually a potential exhaustion in terms of that US dollar weakness. So if we can see the Aussie here, again, as we all know with the Aussie, it's a pretty stable currency. It has been trapped within 64 to 67 cents. We are actually approaching the upper range of that band there. We are around 66.50. And if you take a look at the stochastics and the RSI, no indication as of yet, but if the stochastics drop below 80 and the RSI starts dipping back below 60, we could actually see that pullback lower on the Aussie USD. Again, not trending at all for the Aussie here. This is a range bound market condition. This is perfectly aligned between 64 cents and 67 cents. And with that kind of price movement that we have been observing for the past 6 months on the Aussie, our assumption here is that 67 as a resistance is likely going to hold. This is likely going to just bounce inside that range there. So I think that would be the best way to trade the Aussie at this point in time. Now, if we take a look at the Euro USD here, so for the Euro, we can see what's going on here. It's not really able to move back up above that bearish order block, and it is also being blocked by that Ichimoku cloud here. So there's actually a lot of resistance acting in the market right now. It hasn't surpassed 1.17. It's actually really hard for it to overcome that 1.1650 level itself on the Euro. So resistance, that's going to be at 1.17 on the Euro. And again, the RSI itself is actually not pushing up above 60. It's not maintaining a position above 60. That would put this in a technical downtrend for the Euro USD. all it does, all it needs is for the momentum to turn around, stochastics to turn around, and we might actually get a very sharp rejection on the euro here. And the positioning here, again, this is at the Ichimoku cloud here, also at that bearish order block. So, something to monitor out here for the euro. Now, sterling, very similar situation here with the sterling. It did kind of recovered a little bit, but that recovery is limited to about 61.8%. It is stuck at the Ichimoku cloud at a key psychological resistance as well at 1.3350. And the RSI, again, very similar situation here, is not able to maintain the position above 60 level there. So if the stochastics turns down below 80, we might actually get a very sharp drop on the sterling here. So I think what we should be paying closer attention to is definitely the weekly pivot. That's currently located at 1.33, and any push below 1.33, that could actually send the sterling down really, really quickly there, back to 1.32, potentially closer to 1.3150. So again, something to take note of. And all those patterns that we are looking at on the euro, on the Aussie, as well as the sterling, this is again reflected on the dollar Japanese yen. So if we go by correlation, they are all, the three of those are going to be negatively correlated with the dollar Japanese yen. If you take a look at the movement on the dollar Japanese yen, it did correct itself. As I said, the correction is likely going to be very limited. It's probably going to be just at about 154 last week. And that's basically what we got. So we build up that bullish order block right now, basically at about 154. It's not able to kind of push down any lower, closer to the Ichimoku cloud. If we take a look at the RSI here, it's not even dipping down below 50. In fact, it's actually turning up again at this point in time. So if it does push back up above 60, and if the stochastics turn around right now, it would actually be a hidden bullish divergence. Again, this is something that's actually very hard to ignore. When it comes to probability, when we take a look at price actions here, all of these major currencies are being aligned. The euro, the sterling, the Aussies are showing sign of exhaustion. They're not able to push any higher against the dollar itself. The dollar Japanese yen is not able to be pressured down by the Japanese yen. In fact, this is actually strengthening again at this point in time. Now, the correlation that we're also monitoring is obviously on the oscillators itself. Both the RSI and the stochastics are pretty much in line at this point in time. All right, so that would be the anticipation for this week. There is a high probability that the US dollar could actually strengthen this week. Again, we don't have that data. The market is kind of expecting that cut there for the FOMC. What we are looking at, or the potential risk for how the US dollar is going to strengthen, is probably more of that hawkish comment, a hawkish cut coming out from the FOMC because of that lack of data, because of the US government shutdown. All right. So with that, good luck with your trades, and I'll see you soon.